Welcome everyone. My name is Christy Slininger. Some of you may have known me in the past as Christy Weekly. I got married, so my name changed. But welcome to Revenue Recognition. I apologize, the slide decks were probably not published in advance, but as you'll see, there are very few slides. I'm going to spend almost the entire hour actually demoing the product and going through how the transactions are entered and a little bit even into the setup as we have time. So if you have questions throughout the presentation, please feel free to go ahead and ask. I'll try to answer them as I go. If we do run a little short on time, I may have to cut it off and wait till the end. But feel free to ask questions as we go through it. And I should ask too, as we get into this, how many are currently on F&O AX7 or above? Okay, quite a few. And then those that are on 2012? Okay, handful. And I'm sure there's partners and customers kind of combined in the room together. So what we're going to do today is we're going to take a look at a feature overview, just a couple slides that I have. Then we're going to spend most of the time, like I said, in the demo. And at the very end, I will touch on a few things that we're hoping to add after we do the initial release of the revenue recognition functionality. Okay, so let's just quickly talk about, first thing is, what is revenue recognition versus billing schedules? So as many of you know, we did acquire the functionality from Armanino. And as part of that, we did actually get both of these pieces of functionality. They are not both going to be delivered at the same time. So revenue recognition specifically deals with the accounting aspect of when you recognize the revenue and at what price you recognize that revenue. So as you'll see a little bit later, we'll talk about the setup and how you, or the system interprets whether we post to revenue or deferred revenue, and then also the setup behind the prices that we're actually recognizing or deferring. Whereas billing schedules is really the front facing to the customer pertaining to when am I invoicing the customer. So an example of billing schedules would be is I have one line on my sales order for $1,000, and we can set up a billing schedule where the customer will be invoiced quarterly for $250. So many of you are familiar with payment schedules, which is different. Payment schedules is where we generate one invoice for the full $1,000 for due dates. Billing schedules allows you to actually create 4 separate invoices for that one sales order line and bill them at separate points in time based on the schedule that you define. Billing schedules is on the roadmap. It is coming a little bit later though, so I want to make sure everyone is clear the difference between the two and what you'll be getting with revenue recognition. I see a question.
Sorry, you said it was just for sales orders. Is it for free text?
Great question. So I'm going to get into some of that as we go, but you know what? Let me go to the next slide because that gets into the next question is I've been saying sales order. Well, what about free text invoice? So first of all, we have the 5 revenue steps that are defined as it pertains to revenue recognition. This is just part of US GAAP and IFRS. So the first part is identifying the contract. And that includes one sales order. It could be multiple sales orders. And we'll go through this scenario to show how you can reallocate or combine them together from a contractual perspective for revenue recognition. It also includes project. So if you are doing time and material and creating your sales orders through time and material, we do also support revenue recognition for project sales orders. On this list is not free text invoice and is not journals. We do not support revenue recognition through those 2 entry points. And the primary reason for that is because all of the setup is on the products themselves. The product is what tells us what the revenue schedule is and what the revenue price is. And those are really the 2 key things that the revenue recognition functionality focuses on. Is first of all, what price do I recognize and when do I recognize it? We need the products in order to do that. We don't have that today on the free text invoice and of course not on journals either. So the next step is identifying the performance obligations, and I just kind of talked about this. So as we kind of go through setup, you'll see we spend a lot of time on the release products. That's where we define the revenue price. That's where we define the type of revenue that the item is for. That's where we define the revenue schedule also. And the revenue schedule is really where we define when we're going to fulfill that contractual obligation, right? So if I have a support item that support item may cross 12 months. And that's the schedule that we define, and that's the information we use to actually create our schedule for when we can recognize that revenue. We also have a concept of bundles. Bundles is really just, we're actually piggybacking on the BOM, the bill of materials, and it's just a faster way to enter items on your sales order. I think I have a bundle set up. We can maybe run through this. But all that the bundle is it's a grouping mechanism. So if you have 3 items included in your bundle, rather than keying in all 3 items on your sales order, you can just key in the bundle. The customer sees the bundle on the sales order and the invoice. They don't need to know the components that make up that bundle. So again, it's just more of an ease of entry. Got to get over to this laptop, not this one. Okay, the next part is establishing the transaction price. So I talked a little bit about this already. Revenue recognition, again, we really, part of the key functionality is determining the price that we recognize for revenue. And that can be different than the list price or the deal price. So the list price, if you think about it, could be $1,000. The deal price, though, maybe I give a discount of 10%. So my deal price could be $900. Both of those could be completely different than my actual revenue price. And the revenue price is typically your fair market value that you've defined, and that's what you would recognize from a revenue perspective. And you'll see, I'll kind of go through some of the calculations that we use in the system to determine that. Then from there, we're going to choose to allocate that transaction price. So that's kind of what I was talking about, where I have a revenue price, but maybe one revenue price is actually higher or lower than the list price. We actually go through a process of reallocating the amounts across the various items in the contract to ensure that you are recognizing or deferring revenue correctly for the different items included in that contract. You can do that within the concept of a single order or across orders, and I'll walk through that too. And then the last thing, of course, is recognizing the revenue. So when you post to general ledger, we're still going to post like normal. Really, the only difference is, do I post to revenue or do I post to deferred revenue? That's the only difference. If I defer the revenue, then we're also now creating, I'll call it a little module. We actually have a new schedule with the deferred revenue information as it pertains to every item that we deferred. So we'll show you this list of deferred subledger. And that's where we go and we actually release the revenue. So again, at the end of your period, when you're actually getting ready to recognize that revenue, you can go to a screen and kind of like a payment proposal, you'll put in a date and you'll say, this is what I want to recognize up to this date, and it creates the appropriate journal entries for you. So that's really high level, the model. Let's actually look at the product. All right. So I'm just going to, before I get into the sales order, just point out that we did add a revenue recognition module over here on our list. And what this module includes is every possible menu item that you need to set up revenue recognition or to actually enter transactions for the revenue recognition. There's a question. I already did once. I just don't want to get too big. Let's go a little bigger here. Okay, better? All right. So one thing too I should also point out with the revenue recognition module, all the menu items, is we do have a new role included with this. It's called the Revenue Recognition Manager. The Revenue Manager does not have access to every single menu item that we show here. You'll see here that I actually have the menu item for release products. I'm not sure if that user really should have access to that, but that's where some of the setup is done. So we're still kind of working with customers a little bit as to whether or not they should have access by default. Right now they don't, but would love feedback on that. But you'll see here we have the sales orders at the top. If you are doing it through project, you can also access this through the projects. Here's the journals where we're going to see that schedule that I talked about to actually release the revenue once we should recognize it. There's various inquiries and reports and periodic tasks, and we'll go through quite a few of these. So let's start with the sales order. And I actually created my sales order in advance just to save a little time. So what we'll see with the sales order is in my scenario, I have 3 different items. My first item is my Surface Pro. That's my hardware item. And if you look over here, I personalized my grid so you could see the information that's pertinent to revenue recognition. With this item, I don't have a revenue schedule. And that's because from a performance obligation, once that customer takes that laptop or that Surface Pro with them, I can recognize revenue. I don't need to defer it. So I don't have a revenue schedule here because as soon as I invoice that item, it's going to be recognized immediately. But if you notice, the next item underneath it is my support item. So this is an item where I am offering support to the customer contractually for a 12-month period. And based on that 12 months, that's when I know I need to defer my revenue, is because I can't recognize it immediately. I'm going to recognize it across the 12 monthly periods. Now, another scenario we also support, you can see here, is with an installation service. Now, this is an example of a one-time occurrence for a revenue recognition deferral. And what I've said here, and I'm going to actually scroll over a little now that you can't see these are off the screen, is we do have a couple new dates. It's called the contract start and end date. And these are typically down in your line details, but I moved them up into my grid. So here is where I have my contractual 12-month range. So this is where the system actually defaulted for me based on my setup to say contractually support is starting on the 16th through the 15th of the next year. But the install, I'm expecting to do some type of installation of software on July 1st. So even though I invoice this today on June 11th, I'm not going to actually recognize that revenue until the install actually happens. I'm expecting it to happen on July 1st, but even that could get pushed out, right? So when we get to the point of seeing the schedule, you'll see that the revenue recognition manager has control over that date. So if for some reason the install doesn't happen on July 1st, it happens on August 1st, they can push that date out and have the deferral or the recognition of the deferral happen at that later date and time. So really the key things here are the schedule and the dates. And you'll notice if there is a schedule here, the dates for, it's called PCS, post-contract support items, those dates, the way I have my system set up, are required, but I also have it set up where it just defaults for me. But my one occurrence item, I don't have to define a contract date if I don't want to. It's kind of optional. But again, a lot of it just depends on how you set up your system, so it really is pretty flexible. Okay, so this is all around when do I recognize the revenue. So my first item, hardware, I'm going to recognize it right away. My second two items, though, I'm going to defer it and recognize it across 12 months and at a 1 month or a one occurrence point in time. Now, if you remember, the second thing with revenue recognition is all around the price. So we talked about a little about the list price and the unit price. Notice here, I have $1,900, $500, $250. This is the price that we're presenting to our customer. This is the price that's going to show on the sales order. It's going to show on the invoice. But this isn't necessarily the actual revenue price that we're going to use for revenue recognition. And the reason for that is, you know, IFRS and US GAAP are onto some companies where they say, well, my revenue is really good right now. Maybe I want to defer it into the next period. So to do that, I'm going to maybe bump up the price for my items that I have a deferral on, so that I push that revenue out a little bit further, and I'm going to lower the price of my hardware. Just, they're trying to play the game, right? IFRS and US GAAP say, no, you don't do that. That's what the revenue allocation is all about, is it's basically saying we are going to allocate that fair market value across the items that are in your contract, regardless of what you sell it to your customer for, okay? So once you've confirmed your sales order, and to confirm it, these options here under Manage light up once you confirm. I should also mention, you don't have to confirm. And this is an important point because I know a lot of customers don't. And we did kind of play around with, should we force confirmation or shouldn't we? But we kind of came down to we don't want to interrupt the operation side of things. So if you don't confirm it, we will calculate and allocate the price upon invoice. We will create the schedule upon invoice, so you don't have to worry about remembering to confirm. There's a question in the back.
For the one occurrence installation, can that be split out to multiple performance obligations? So like, let's say maybe 33% of it is recognized for installation, another third for training, and another third for like the completion?
Sure, so the question is, can I take that one occurrence and split it out based on different milestones or obligations that I have defined within it? You can, but it's going to be manually done. And the reason for that is because it's set up as a one occurrence. So I'll show you when you get to the schedule, we're going to have a deferred line for the full amount on that date that I've defined. But you can do a partial release. You could say I'm going to release either a sub quantity. You know, maybe this line is for 100 quantity. I could release 50 of the 100. Or we can do it based on an amount. So you can do partial releases. The other thing you could look to do is you could put a 3-month schedule on here. And we do have the capability to say release like 50% in my first period and 25% in my second period, 25% in my third period. So you can also kind of play that game a little bit. Again, it just kind of depends on the scenario and whether you want to manually do that. We don't have any, integration to understand you've completed a milestone in project. We don't have that type of integration.
What if I have a single amount that I want to recognize against multiple stage dimensions, financial dimensions, like a service segment, for example?
Okay, so you have a single amount and you want to recognize it or defer it. Recognize or defer across multiple financial dimensions is the question.
Either defer it across multiple
Okay.
financial dimensions or recognize it across.
Yeah, so I think you're probably getting into a little bit about the source document. On the purchase order side, we do have the accounting distributions where you can split the expense or the asset across multiple financial dimensions. We don't have the accounting distributions on the sales order side yet. It's kind of in our plans, actually, hopefully pretty soon. So we don't have that capability within the context of a single line. Now, keep in mind, you could still use allocation accounts. It may not be ideal, of course, because if your percentages change. But until then, you'd have to have it as separate lines if you have different financial dimensions. Yep. Okay, so let's keep going on the price. So I talked about how we have to allocate that price that we have defined in the system. So when we open up the price allocation, this is going to show us how the system is doing our calculation, and I'm actually going to open a spreadsheet here. But you can see here that all 3 items are here, even though I didn't defer my hardware item. And that's because it's still part of the contract, and we still need to take that revenue price into account when we determine what revenue amount we're going to either recognize or defer. Also, the other thing notice is our support item is split here, and that's because the support we're offering it, based on my setup, is across an item that we call an essential item and a non-essential item. We're offering support on both. And we just, from a calculation perspective, it actually weighs things a little bit differently if your contract support is across essential versus non-essential items. So that's why those are split out. What I'm going to do, though, let me just scroll across here, is you can see here, again, unit price. This is what we were showing on the line. Remember, these two add up to 4, or actually it was 500, or is that right, $500? Yep. But look over at my allocation price. These are the prices that I've defined in my setup as my fair market value from a revenue recognition perspective. So what we do is we use these two numbers to determine what the allocation amount is, and that's in this column right here. I'm going to jump to my spreadsheet. So what I did here, what the next step I'm going to show you is I just exported this to Excel. I did this in advance just to save time. So this is that exact sales order that I exported the information. So what the system does is it adds up my total unit price. And if you remember, my prices on my sales order totaled to $2,650. But then I add up my allocation price, and notice it's different. It's $25.25. So what the system does is it divides the total unit price by the total allocation price, and that gets me this 105 factor. Then I take that factor and I multiply it by the allocation price, the revenue recognition price, and that gets me my allocation amount. So, and that's just basically, if you look at my calculation here, it's taking the factor times K2, which is my 1800 here, and that gets me the 1898, 1889.11. Notice this one is off by a penny because we have a rounding. So we did have a penny difference, so we are sticking that penny in here. We want to make sure we're fully relieving what we're deferring, right? Or what we're calculating. But the key thing is, if once I add up these new allocated amounts, it still has to equal $2,650 because the amount we're invoicing the customer doesn't change just because we're changing the amount of the revenue around on the items. Your invoice is still your invoice for $2,650. Okay? So that's how the calculation is happening. Now from here, let's go back to the sales order. We do have a couple other buttons, and I'm going to come back and talk about those a little bit later. But the first three deal with the price allocation that we just looked at. The next two deal with the schedule. So at this point in time, I haven't invoiced my sales order yet. So we do create an expected schedule for you. So if remember, we have 3 items, but only 2 of them are deferred. So that's why when we look in our schedule, you're only going to see 2 of the items. So if we go over, here's our support item. You can see here's the schedule. Notice it actually split it out across 13 periods, and that's because we're in a partial month based on my setup. So it might be across more periods than what you defined. Here's my installation service. So if we go over, we can see here the total amount. And remember, these are the amounts that were calculated from the revenue allocation, not the amounts on your sales order line. And we're basically saying, take that, look at the schedule, and then divide that out based on the percentages of my schedule. And here's the amounts I'm going to recognize. And again, this one occurrence is for the full amount. And then if we go back here a little bit, here is the recognized date. So notice here's my 12 or 13 months actually that we will use to recognize the revenue when we eventually get to the period ends. And then here's my July 1st, because remember my install was going to happen on July 1st. So that's when I expect to recognize the revenue. Question?
How do you handle the rounding on the schedule? I saw how you did it manually when you were allocating the lines, but...
Well, so the question is, how do we handle the rounding? I didn't do it manually when we were calculating the price allocation. The system actually did that automatically. I was just pointing out, if you looked at my calculation, it was off by a penny, because the system recognizes I have some penny differences and it's going to stick it into a line. I think what it does is it just sticks it on the last line, puts it in the last period if there are some penny differences. But yeah, we definitely will have rounding, so we have to make sure that gets accounted for. Couple questions.
What happens if there is a price adjustment?
What happens if there's a price adjustment? You can do an update or a reallocation. So I'll kind of walk through that a little bit, but that's actually back here. So this update price allocation, this is one way you can update, do a reallocation if your price changes. The one key thing though you have to ask yourself is, has it been invoiced yet or not? If it has been invoiced, then you're going to use this reallocate price with new order lines. And this should also say, or updated order lines, because you could have price changes and we do need to go and potentially back out what was recognized based on the new price and recognize it at that new price.
That one also handles the period adjustment? Suppose if the contract goes from 12 months to 18 months for the same period.
Correct, yep. So the question is, does that also handle contract changes? So originally it was 12 months and it goes to 18 months. I wouldn't use this button. There's actually a way to update the contract on the schedule even after you invoice it. Or if you catch it before you invoice, of course, you can just change, the schedule on the line. This is editable. The key thing, though, is if you edit it, well, again, I'm saying it before you invoice, right? So that's the key thing here. If you do change this, and let me just point this out, I'm going to change the end of the contract date to 2001. Notice what happens when I tab off is my revenue schedule changes. Your contract, the number of periods in your contract must match the schedule. So if I change that to, let's say, 115, notice my schedule goes away. And that's because I don't have a schedule defined for, I don't know, what is it, like 18 months or whatever, in my system. So the system says, I don't know what to do because you've told me this contract runs for 18 months, but I don't have a schedule for 18 months. So I don't know what percentages to use. So when you set up your system, your customers need to have every possible contract length that they offer to their customers set up within the system. And then once you change it back, so let me just change this back to 6. You notice my schedule came back in. Another question in the back.
buying additional add-on product
Yep,
into the contract,
sure.
and I want to recognize it only for like odd number of days for remainder part of contract, because I'm only prorating and charging for that portion only.
Okay, so the question is, or the scenario is, I have this contract and I say it's 12 months and I'm already 3 months into the contract, and then I add another item, correct, onto the contract, but you don't want to change the previous 3 months, you want to just change it from the 9 months going forward?
Correct.
Okay, I don't believe we support that today, based on what I've found, but what it will do is it'll reverse out the 3 months that you recognized and change it, because you've now changed your contract. Although I should add a question or a point here, though. It is a new item. I should also clarify that.
If you want to only recognize the revenue over the next 9 months, not
Yep.
start
Okay.
a year from.
Yep. So let me clarify too. If it's a new item, that new item will have a 9-month schedule on it. It won't have 12 months because it's a new item on your sales order. So you can control the length of time of the contract for the new item. It doesn't have to match, just like here, my contract dates don't have to match on the items that are included contractually with the customer. So yes, you could definitely add a new item, put a 9-month schedule on that new item, and then what you'll do, and I'll show this, is do the reallocation. Because the reallocation, again, is not having to do with the schedule, it has to do with the price. What amount should I recognize? You do need to run a reallocation, though, because the amount could be different because you've added an additional item onto the contract. Another question in the back.
The list price can be zero, so let's say the service is included, but from an allocation perspective, you need to have $1,400 of that service is an immediate sale, and the other
Yep.
gets recognized. That could be a line for zero list price.
Yes.
On the fair market value, you say it's whatever.
Correct. Yep. So the question is, so my support item, I could really have a price of 0 on it? Sure, absolutely, because as long as you have your revenue price defined on your item, which could be $1,500, it will use the $1,500 and allocate it across the items that are included in your contract. Correct. Okay, I'm going to keep going because I don't want to run too short on time, and I want to get to the reallocation because it's a pretty important scenario, and a lot of you really are kind of getting into a lot of questions around this scenario. Okay, so what I'm going to do is I'm going to go ahead and invoice the sales order, and while this is running, I just want to point out packing slip. Packing slip has not changed as it pertains to revenue recognition. So if you require packing slip, just like normal, that's fine. If you don't, whatever. Everything happens at the time of invoice. Nothing is different on the packing slip. So that's one thing I just want to make sure I mention. So let's take a look at the voucher. So our invoice posted. Now, if we take a look here, what's happened, here's our deferred revenue. Let me get over to our amounts here. So if you remember, our hardware item was $1,900, but when we did the price reallocation, it came to $1,889.11. So you can see here, that is the amount that we're recognizing and posting to revenue. All the rest of it is going to deferred revenue. So those are the 2 items that I had the schedule on. So that's where we can see our amounts. One thing I should also point out is if you do have a hardware item that you are deferring revenue on, the cost of goods sold will also follow. So it will also defer your COGS to match the revenue if you have that scenario. I think it's a pretty uncommon scenario typically with hardware, but some customers must actually have it. So COGS will follow the revenue. All right, so now let's go back. Okay, so I have my invoice. Now notice my expected recognition schedule is disabled, and now I have my real schedule. We got a question over here.
Is the deferred revenue on the prior screen the same as the inventory posting profiles deferred revenue that's used if you recognize revenue upon shipment?
So the question is that deferred revenue the same as what's showing on the inventory? But are you talking about deferred revenue when you're doing the packing slip?
Yes.
Yeah, so again, that's different. So when you do the packing slip, it could go to deferred revenue. When you invoice it, though, it completely reverses it out. So that's a different deferred revenue account than this revenue account.
So separate postings.
Separate posting types, correct, separate posting types.
If our revenue price is different from the price on the sales order, so if we're using fair market value, where does the difference post?
It's a great question. I'm actually going to demo that. So the question is, what happens if I calculate and my revenue price is different than my fair market value is different than the amount of the actual sales order in the invoice? Where does the difference post? And I will show that scenario in just a little bit in the reallocation, because it can happen, especially with partial invoices. So let me get back to that. Okay, so we have our revenue schedule here created now. So I want to point out, I can get to this schedule off the sales order, and this is going to show me the schedule for just this individual sales order, filtered down to it. I can access this exact same window also under periodic tasks. And that's important just because you're typically, as the revenue manager, you're not going to go and release your revenue one sales order at a time, right? You're going to have hundreds of these documents that potentially are deferred. So instead, if you go to periodic tasks, then go to your revenue recognition schedule here. This is the same window, except you first have to put in some filter information. So if I want to filter it and say, only show me the schedules for customer US 003, which is what I used. Here you'll see everything that was deferred for that customer. Of course, you can put in a date range. You could filter it to just a specific sales order. But here's where you're going to come, and you could really just put in a date range, typically, at the end of your period to see all the information. But really the important thing that we have here is the create journal. So this is where you're going to go, and this is where you're now going to release your revenue. So just imagine I've got all these hundreds of sales orders. They've been invoiced. I have all these schedules for all hundreds of these sales order invoices. And I get to the end of June, and I want to actually recognize now my revenue that I've earned through the month of June. So you can come here and put in an as of date, and the system will go through and pull all of the records from your schedules that fall on or before that date and actually release it to recognize it. And it creates a journal. And we'll go through that in a second. When you release it also, the next thing you have to say is what date do you want to post it on? You could either use a single date for all of the items that you release, or you could say actually use the date on the schedule itself. So I don't know, people probably are going to use the end of the month just because that's when you're recognizing it, but you do have the option here. Before I do that though, let's just take a look a little closer at the schedule. So now that I have the actual schedule, if you just scroll down here, you can see I have multiple sales orders. My sales order was 00890. Let me just filter, wrong field. I'm just going to filter down to that one sales order. So just like I showed you before, this shows you all the schedule details. If we scroll over here, and I'm going to point this out, there are like a million columns in here. Remove what you don't want, right? Personalize this. But you'll see here we have a ton of information here. We're probably erring on the side of showing too much rather than having you add columns. But you'll see, you can see all of your amounts that are deferred. You can see your cost of goods sold that's deferred. You can see your quantities. So when you actually come around to releasing the revenue, there are a few things you can edit in this schedule. So if you remember, I was talking about how there may be a situation like at this install service, where if you remember, we said we're going to release it on July 1st. But maybe that changed, and it's actually going to happen on August 1st. I can change the date here. So this is where the manager, the revenue manager, has control over when things are recognized because maybe we didn't fulfill the contractual obligation yet. So they can change that. The other question was around like doing a partial release. I can also release a partial amount or quantity. So rather than 288.60, I could say release only 150 of that. Oop, I'm on the wrong field. That's the total. Here's my amount to release. And you'll see what the difference does is it goes and tracks it in the remaining amount. So here, as you hit those milestones, again, it's a manual process, but you can come in here and change the dates and change the amounts of when you want to release and how much you want to release. You can't change it to be greater than the amount though. So the 288.61, I cannot go more than that amount, which makes sense because I've deferred a specific amount. We want to make sure we relieve that same amount, right? Okay, a couple questions.
Question, can we set up a batch job for this process, for recognition process?
Yeah, it's a great question. Can we set up a batch job? We don't have that today. I think it's on our pretty short list though to add. Yep. Another question here?
Do you track the history of the changes? Because many times the auditor comes and asks, what happens when you change it? Okay, it's good, but do you track the history?
Yeah, do we track the history of the changes that are made? We don't know, but of course you can turn on the table tracking, right? Which, it's gonna blow up, right? But you can track it if you want. Yes, be careful with that. But I guess one question is, how important is that? You know, I mean, is it so important to track that here, or is it just the table tracking, is that adequate, I guess?
Table tracking goes up.
Exactly.
Very important to track the changes.
Okay. The question in the back again?
Yeah, you mentioned you guys are able to defer cost of goods sold, but what about commission amounts?
The question is, what about commission amounts? Commission amounts are not impacted at all by this. Yep. Okay, so we have our amounts we can edit, we have the dates we can edit. One other thing too, if I go back to the start of the grid, is this last install item, if you maybe noticed it when I came in here, is on hold. So you can also in your setup define schedules where the system will automatically place the lines of the schedule on hold for you. And that's a perfect example of an install where you're not sure of the date. So you always want to place it on hold because when the actual install occurs, you can go and release it off hold, change the date if you want to. But once it's released off hold, then as long as it meets the date that we use on that create journal, it'll get recognized for the revenue. So the other thing, of course, you can change in here is you can remove that hold. Now, another question earlier was around like changing the contract dates. I know the one thing we talked about is, well, what if I add a new item? Well, we also have a situation where you could, you know, maybe I accidentally posted this should have been a 24-month contract rather than a 12-month. Even after you invoice, you can come in after the fact and update your contract. Oop, and my focus is on the one occurrence. Let me just put my focus on the support item. Any one of the lines, doesn't matter. And I can do update contract terms. So you'll see this looks kind of familiar to what we had on the sales order. Here's my contract start and end dates. Here's the schedule that's going to be used. If I tell the system, you know, this is really 24 months, it's going to change that. You can place it automatically on hold if you want to, just to verify that this is correct. But if I go ahead and click OK on this, you're going to see what's going to happen is now the schedule that we previously had is now changed from a 12-month schedule to a 24-month schedule. Now, one other thing, and I'm not sure if I'm going to have time to demo this, is keep in mind you might have released the revenue for maybe one or two of these periods before you caught this. If that happens and you change the contract dates, what the system will do is that it'll actually create a reversing entry with that amount you recognized on those historical dates, and then it will create a new entry for the new amount that you should have recognized on those historical dates. So we will reverse out, at least not automatically, it creates it in the schedule. We will reverse it out what you've already posted and then record it at the new amount of what it should have been based on the updated contract. Okay, questions? Do those periods have to be open? We're not going to post into a closed period. You actually define the date that you want to use when it will do that. So remember, the dates that are on this schedule aren't necessarily the dates that you post with, right? So it would, let's say that, let's go back to our top here. Here I have, 6/16. If the month of June is closed and I go and I create my journal, obviously when I try to post that, it'll error out. You just change the date on the journal or you change the date here, right? So
Reverses the ones that you've already recognized. Doesn't it have to go back to those days and reverses it
well,
today?
yeah, so the question is, well, if I already posted it in June, doesn't it have to go back to June? Well, you got a chicken and egg problem, right? It should, but your period's closed. So you're going to have to reverse it in July if your period's closed, right? So, yeah, can't have both, I guess. Okay, so actually, I should have just stayed in there. Let's go ahead and create the journal. I'm going to just release a few of the months. Let's actually go to August. Okay, so what the system will do is it's going to rip through what I have here, and it's going to say, hey, we've released 20 of these to your to a journal. And notice it didn't restrict it to just what I filtered it here to. It actually releases it for all of the sales orders that I have in the system here that have, of course, deferred revenue. So if I go to the journals and take a look, the journals do not post automatically in this scenario. That just gives you time to review, make sure that what you released you actually did want to release. And it should be this one. And you can see here what we're doing is it's a very simple journal entry, just a ledger to ledger. What it's doing is it's moving the amount out of my deferred revenue account and putting it into my actual revenue account. And it's going to use the same dimensions that were entered on the sales order. So one thing to keep in mind, and I've had some questions from customers, well, your deferred revenue is a balance sheet account and your actual revenue is a P&L account, and they're concerned about financial dimensions. So if you notice here, this balance sheet account doesn't have services for my financial dimension, but the deferred or the actual revenue does. And that's because I have a different account structure. And as long as those dimensions were present on the sales order, we are tracking those dimensions with your deferred revenue records, and we will use those. But obviously you have to be really careful, because if you have a dimension that's required on your revenue and you forgot to put it on your sales order, you're going to have a lot of manual updates to do here. So one thing I'll point out is we do allow you to change the revenue account for this exact scenario, right? We want to make sure you can post, but we do not let you change the deferred revenue account. This is the account you posted to. We want to reverse it out of that account, so we're not going to let you modify it here. Question?
Last cost of goods account goes to deferral automatically, because I've noticed recognition line for cost of goods, not for revenue only. So is it because I have some cost of goods behind revenue that will be recognized?
Yep. So the question is, why am I seeing a cost of goods sold here? So if you remember earlier, I was saying if you do have a hardware item where you defer revenue, and I probably did, I was playing around, the cost of goods sold will follow the revenue. So what this means is I actually had a revenue schedule for a hardware item that was deferred. And when I recognize the revenue for that item, I also have to move the deferred cost of goods sold to the actual cost of goods sold. And it does it together, same percentage, yes. It always matches the allocation. Okay, so I don't know, we can post, we cannot post. I'm just going to ignore it for right now. But I'll just go back to the schedule and just kind of show you here. Once you've actually sent that to your journal, actually, let me just put a date of today in here. You'll notice that what the system does is it marks it as processed. Be a little careful with the word processed. It doesn't mean posted. It means it's in a journal. Maybe posted, maybe not. Once it's posted, you will see a voucher number though. And the voucher number does have a hyperlink, so it'll actually take you to the specific accounting entry that was posted as a result of releasing that revenue. So that's how you can see what's been released. Okay, let's go back to the sales order though. I want to get to a reallocation scenario. So scenario again is, of course we had our first sales order for this customer. They ordered the 3 items. Well, at the time, we also told the customer, hey, if you're interested, you can also buy insurance. And well, the customer says, nah, I don't want insurance. But they come back like a week later and say, yeah, actually I do want to add it. So what I'm going to do is I'm going to do a new sales order, has to be the same customer, and I'm going to add insurance onto this sales order. And if we go across your notice, insurance is for 24 months rather than 12 months. And if we go over a little bit more here, here's my contract start and end dates. Let's maybe change it just to be 12 months, whatever. But notice here, if I go ahead and I confirm this, let me save it first. if I confirm this, what the system is going to do, remember, it does that price allocation, right? Well, we only have one line item here, so there really isn't anything to reallocate across. So when we look at the revenue price allocation, there's nothing here because it's just one line item. We're going to recognize the revenue at the price that you put on the sales order. That's the only amount we have. But really, we should have across the context of those 4 items because it really is part of the same contract. So this is where the reallocate price with new order lines comes into play. I want to point out what I'm going to show you is 2 separate sales orders, but it doesn't have to be. I could have added a 4th line onto that previously invoiced sales order and used this exact same window to do this exact same process. Or another really common one is my customer returns something, and maybe I'm not doing the full RMA, I'm just doing a credit note, a credit line. Same concept. If I add that credit line onto my previous sales order, I need to include that in my price allocation because now it shouldn't have been included. I can again add that line to the existing sales order and do this reallocation. So there's a lot of different scenarios you could use this for, so keep that in mind. It doesn't have to be this exact one. Okay, here's my sales order, my 1 item. Here's my original sales order for my 3 items that were on it. Notice my price allocation here is right over here. Those are the amounts that I recognized, but I have 0 for my 4th one because there wasn't any other items. And I'm going to hit update reallocation. And notice the system now calculates the revenue price, assuming all 4 of these items were on the same contract/sales order. Now you might be questioning, well, you already posted that invoice. That is what the expected voucher will show you is what the system is doing is it's going to create a reversing entry to reverse out the accounting of your first invoice and actually create a whole new accounting entry based on the new reallocated price. Okay, so here's what we're seeing, and this is actually kind of a nice little window. I wish we had this everywhere. This actually shows you the reversal and the new accounting entry. Now, this is an example. There was a question earlier about, well, what if my price doesn't match my total accounts receivable? This is that exact scenario. Because if you remember, my total was $26.50 for my first invoice. And these 2 amounts did add up to $26.50. But if you add up the new amounts that are posting to deferred revenue and actual revenue, they do not add up to $26.50. Because the revenue price is considering all 4 line items. So we're actually off by $120.35. So what we do is we have a new account, just like with deferred revenue, there's a new partial clearing or partial revenue clearing account, something like that. I can't remember the exact posting profile. But this is for that specific scenario. So it's going to post this amount here temporarily. And when you invoice the second sales order, it's going to take it out because the second sales order is off also by $120.35 on the credit side. Okay, so the 2 invoices together are going to clear out that account, but then you still have your same accounts receivable amount for the $26.50. I think there was a question in the back.
What date does it use for the reversal?
Let's see. So the question is, what date does it use for the reversal? When you click process, you tell us the date to use for the reversal. So the same kind of problem, right? You could be in a closed period. We're going to default it to the invoice date. But if that invoice date is in a closed period, I believe we actually do default it to the first date of the first open period that it finds. Okay, so let's click OK and actually process this. Now, this is one example where we do actually post this right away. It doesn't stop, but we are going through that same revenue recognition journal. So I'm going to open that up and just show you. Is anyone familiar with the Armanino product? Okay, what I just showed you is actually different. It's going to do something different. Previously, when Armanino did this process, their accounting entry, if we look at the posted, here's our adjustment journal. Their accounting entry was all ledger accounts. If you think about that, it's kind of bad because we're posting to accounts receivable. It really should be going through your subledger. So we actually did a big change where we changed that. So now, if you notice here, your accounts receivable account does have a customer account type on it. So what this means is if you go to Strands, you're actually now going to see your invoice, a reversing invoice, and a new invoice. Now again, your total accounts receivable hasn't changed, but the offsetting revenue accounts have, and that's very important that we have that information because settlement uses that for cash discounts, actual gains and losses. So we want to have the updated accounting entry in accounts receivable. So that is one big change that we just made with how that reallocation works, is it does now update your subledger.
So does it do a settlement for you automatically?
Great question. Does it do settlement automatically? Yes, it does. So what it will do is it'll actually settle automatically your original invoice and your reversing, and then you have just your new invoice with your outstanding balance. If a payment was applied to your original invoice, we actually unsettle it and resettle it to your new invoice also, and then settle your original and your reversing entry. So we do all the settlement for you under the covers, so you don't have to do any of that. Question?
My concern about the dates is that the whole idea of deferred revenue is so that I have a fixed amount in month 1, month 2, month 3. If the period is closed when I have to do this adjustment, and it posts the actual revenue earned in the new ledger period, then I have no revenue in the previous period that's been closed. So I've not actually recognized revenue according to the contract or what I expected.
Well, so the concern is with the date that's used, I think, for the reallocation specifically. So keep in mind, if for some reason you posted the original invoice in June, and June's closed, so you did the reallocation in July, your June accounting entry is still there, right? So you have actually recorded revenue in June. The amount might be incorrect, though. Yep. Again, this is kind of the chicken and egg problem, right? So I guess it's really up to you as the customer, which is, do you reopen your period and do the adjustment? Which I'm guessing not. I guess I'm looking for what is the solution you'd like to see, because I don't know how to solve that problem. You cannot reopen a period if it's
Because of the fact
correct.
cuts across the fiscal year, and especially if you are already published your account. In
Yep.
case of a public account, if it's a
Correct.
listed company, you cannot go back and open them.
Yep. So again, I'm not sure how to solve that problem. If your period is closed, I think you have no choice but to go to the next period. And yes, your amounts might be slightly different between the two. Another question?
Yeah, so you are creating a reduction invoice, but what about if VAT? You have some VAT in the original invoice?
Say that one more time.
So if you have VAT calculated in the previous invoice, in the original one, and you are doing a reversal, are you also reversing the VAT?
The VAT, so if there's tax involved, that's actually a problem we are working through right now.
Because also, there are some countries where you need to
Yep.
report the invoices every day coming from Spain, so you need to do it.
Correct. Yep, so the question is, what if there's tax involved? We're actually looking at, it's a bug right now, because when we do this reversing entry, and you try to go through a journal and post to a tax account, it errors out unless you actually have the tax codes on there. So the problem we're trying to work through right now is we can't put the tax codes on the journal. And the reason being is, look at the amounts. The amounts that are on that journal is not the taxable amount. It's the revenue amount, which is different than the taxable amount. So we can't put the tax codes on this adjusting entry because then our taxes would calculate and be wrong. They would be different. So right now we're working with the tax team to figure this out because we can't put tax on here. So we're kind of playing around with, do we try to create like a reversing tax trans record, or do we just basically ignore it and say, we're going to go in and out of the tax account. So keep in mind, your tax amount does not change when you do this.
Yeah, but you cannot create invoices if you are not reporting VAT.
So that's why we're working with the tax team, because it's an issue. We're trying to figure out how to solve it. Yep. Question? Yep, what about currency? Very good question. If you're doing multi-currency and there's different exchange rates, when you do the schedule must always use the original exchange rate of what you deferred because you have to zero it out. And if it doesn't, we have a bug. And it didn't before, and I wrote it up as a bug and it's fixed. So yeah, we do maintain that original exchange rate of what was used on the original posting for the deferral to release it. Okay, another question?
I have a couple, so I can wait till the end.
Okay, let's maybe wait. We got about 5 minutes left. I'm just going to go back here. I just want to point out one other quick thing. We do have a workspace. It is kind of some work in progress. We don't have analytics on here, but actually that's kind of my next to-do thing. But we do have the workspace here where you can see just some basic information. Milestones are those one occurrence type items where it's a milestone, and that's when you release it. That's what shows here. If you have things that are on hold, we do have that, and of course we have the corresponding lists that go with it. And you can do things from here also. So if you do want to create your journal from here or remove a hold from here, you can actually do a lot of those same processes as the revenue manager from the workspace. I do want to just quickly go back and talk about kind of where we want to go a little bit. So the one thing after we release the initial product, the next thing we want to get to is analytics. We do want to add a lot of Power BI around this. We do have an inquiry that is there today, and we chose specifically to not do it in SSRS. We just did it as a grid where you can export it to Excel and do your analysis there. But we do want to get deeper and do more in Power BI, and that will be on the workspace. Multi-currency revenue prices. So we do support multi-currency like we were talking, but to set up the revenue prices is a little painful. If you do go into your items and need to define that fair market value that we talked about, you have to do it for every currency. We really would like to get to a point where you could just define it in your accounting currency, and then it maybe uses like the spot rate to convert it to your transaction currency, or maybe give you guys an option of what currency exchange rate it should use. So it is a little painful, I will tell you right out of the box, because if you do have a lot of different currencies that you sell in, you have to define that revenue price in every currency. The good news is we do have entities, so pump it in through the entity. The next thing, or the last thing on the list, is a sales order. So the revenue recognition manager does have access to the sales order because that's where they can go and make sure that the schedule is right. And that's where they can go and look at that allocation price. So we do want to give them access to the sales order, but obviously there is way more information on that sales order that they really need and more than they care about. So we do want to get to the saved views. We do want to actually ship out of the box a personalized sales order view for just the revenue recognition manager when we have that functionality available. And I think you probably saw that from Jason Green maybe in a client session. So that is also where we want to go, just to really streamline the information to the manager and what they care about from a revenue recognition perspective. And that we believe that can actually be also linked specifically to that role so that they don't have to pick that view every time they go in. So those are just some of the things we're looking at for the future. I'm sure this list will grow, but really the analytics is probably one of the biggest things that we are missing out of the box. I probably should just talk about the elephant in the room, which is when are we shipping this darn thing? Because it obviously has been it's been deferred a little bit, right? We are really hoping the next release, which is 10.05, but I'm going to tell you right now, do not quote me on that because it very well could change. We have new discoveries every day. So, you know, if we do run into additional issues, this tax issue that we talked about is actually a really big issue. We're not really sure quite yet how to fix it. That could push us. So we're hoping for 10.05, but that could get delayed. So that would put PEEP around September timeframe is kind of where it would fall. So I'm going to put that out there. It could change. That's all I'm going to say. Questions? Great question. Will this work with an intercompany scenario? And I'm specifically assuming you're meaning intercompany trade, correct? Yeah. Actually, we do support intercompany trade with this. And there is an option on the customer where you can say whether you want to do a price reallocation or not, because it kind of depends on how you sell to your other organizations within or other companies within your organization. So you could choose to do a price reallocation or not for those. Those are actually, there is a setting on the customer. But yeah, we support intercompany trade. Other questions? I think we got about a minute left. In the back? Do we support 445 period? It is purely monthly. We don't look at the calendars at all. So that's a good question. So for the periods like 445, we don't look at that. It's a purely monthly thing, and then we just use the date of when you go. So whenever your end of your period is, If it's 445, that's the date that we will use that's on the schedule. Yep, so it does not look at your calendar for your fiscal periods at all. There was a couple questions I thought over here.
So we have customers who want to be billed a flat fee for several service types that are different revenue streams for us. So I can see how we could build out a bill of material for that. But let's say we put 5 things under that BOM, but that customer only wants 3 of those. So can we take that sales order and allocate it to just the 3 line items that they want?
So the question is, I have a bill of material that 3 out of the 5 items are revenue recognition.
The customer just wants to see 1 line item.
Well, so remember, when you use bundles, you see just the bundle.
Right.
But when you go and you confirm it, the confirmation actually explodes it automatically. We don't use the BOM function explode. We do it on confirmation. So it'll explode it, and whether it's deferred or not is completely up to the setup of those items. So you could have the 3 items set up with the schedule, with the revenue price, and the 2 others not. And
Allocate the price between
just the 3, yep, because the 3 items are where you actually, on every item, you say, do I price allocate, yes or no? And what's the schedule? And then also, what's the revenue price if I do price allocate? Yep.
So if I have the same item or bundle, that sometimes it's sold deferred and sometimes it's sold tech material. I have to pay 2 separate items. Is that a thing called?
Yeah, so you're saying you have the bundle, sometimes it's deferred and sometimes it's not. You would probably want to create 2 separate bundles, one that's deferred and one that's not. Otherwise, I mean, you could always edit it on the sales order itself, but obviously it's manual, so you want to be a little careful that someone doesn't forget to edit it. But yeah, you could do it really either way. Sure. Yes. Nope, the setup basis is still there. Yep, I just didn't talk about it or show it. But yeah, the setup basis is for your post-contract support items. That's kind of what I was alluding to with the essential, non-essential. That setup basis is how it says these are the items, either non-essential or essential, that I'm going to allocate across. That's still there. Okay. Yep. Thank you for everyone that came. I'll just be up front here or walking around if you guys have more questions. I'm not sure if someone needs to get up here to set up.